The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Well, hello. It is the 4th of June. This is Ausbiz, the COB, and I'm Nadine Blaney.
I'm Juliette Sarli. On a bit of a ho-hum day, Nadine. I mean, we saw a little bit of momentum coming through in terms of, I guess, some volumes, but let's just see where the market is ending out the day's trade, because we had a pretty flat, tepid open, and that's where we've kind of ended as well. So not much movement at all, down about 0.2%.
No, and just like not a lot of corporate news, I don't think either. And even some of the key sectors were a bit mixed. So you had, CBA up by 1%, ANZ flat. You had BHP down by 1%, but you had some of the gold miners pushing higher. CSL was up, and then everything else is a bit of a patchwork quilt out there today.
Indeed. Well, that's what we sort of had as our theme. So we're running out of energy because the energy, do you like what I did there? I was running out of ideas, to be honest. The energy stocks were certainly, as you mentioned, a drag. A little bit of upside momentum in gold. And then, is there signs of the economy flatlining ahead of tomorrow's GDP print with that March quarter deficit?
I saw ANZ is expecting to see, just everything being really flat when we get that national accounts data out tomorrow. So I think growth of 0.0% coming through, which is sort of the vibe you get out there when you're traveling around. Although I must say my lift up here at Barangaroo this morning, that was the busiest lift I think I've been in 4 years.
Oh yeah, I the same, and it stopped at nearly every level. I was like, what is this? This is not business class. I'm getting off at every single station.
Yeah, it could have been because I was a little bit late this morning as well. Anyways, on from that, let's just, sector-wise, we've got the energy plays coming under pressure, so there's a little bit of consternation in the wake of that OPEC Plus decision. Those are pretty steep falls for some of the smaller companies as well. Karoon Energy, I saw it on my list, and I meant to see if there was any news in particular associated with Karoon, but I can't really see anything, so just sentiment.
Yeah, and having a look at those gold players, because that was one bright spot when you look at your market map. Perseus up by 4%, De Grey up by 1.4%, and it's interestingly, Newmont was actually ex-div today, so I don't know why we're not getting a read on that.
We did earlier. There's something wrong with that. So let's move on.
Yeah.
You heard me, if you were watching previously, talking about Robert Rennie from Westpac writing about iron ore. And it's not necessarily why these companies are down. Price of iron ore has been coming under pressure for a couple of weeks now. But he says it feels as if it's just a matter of time before we start to see a more meaningful correction below 110 and eventually 100. Brought on by the market beginning to focus on rising supply out of Africa in 2025, in addition to, some problems in China and
I feel like people said this time a year ago, and they were proved
possibly
wrong.
Good point.
All right, let's have a look at some of the corporate stories. Oh no, the banks, because they had a good day. CBA up by about 1%, Westpac up 0.5%. When it comes to the corporate stories, I love a little bit of a Lovisa story, but continuing to fall today, although it's closed off the lows. Of course, there's a shake-up at the top. John Cheston from Smiggle will take over, I think, in about a year, but the market really seems a bit disappointed that Victor Herrero is leaving Lovisa. He was seen as a bit of a coup for the company.
Yeah, and just, I guess, a little bit of instability, a little bit of unknown coming with the new CEO. But watching Lovisa, GrainCorp down by 4.6% today. Up, I should say, 4.6% today. That's because it's been bolstered by that ABARES report, crop forecast for the East Coast, and we got some rain as well across the West and South Australia.
Yeah, a big fall coming through from Cooper Energy. It actually affirmed its full year 24 guidance and said it remains committed to the Southeast Australian gas market, but shares fell, 1 cent, which is a 5.5% drop when you're that small.
Yeah, keep in mind, this is not market cap we're talking here. This is corporate stories, and Life 360 was the stock of the day today. It is going to be listing in the United States. We knew that this was likely on the cards, but pretty positive reaction to see that come to fruition today.
All right, let's get to our guest, Martin Crabb from Shaw and Partners. I mean, how do you sort of assess a day like this when there's not much happening? We've just got to continue to do our job and keep our head up.
Yeah, there's a bit of a nothing bird going on today, wasn't it? The market sort of opened on its highs and drifted all day. Not a lot of macro lead. We've got jolts tonight, so people are just looking at labour demand in the US Obviously, you've got the European Central Bank's decision, the Bank of Canada's decision later this week. So there's macro to look forward to, but a little bit of a vacuum today. So the limited corporate stories that we've spoken about, Lovisa and things like that, GrainCorp, Elders on the ABS report, not a lot of news flow either. So it kind of comes back to the big picture macro of, how expensive the market looks on traditional measures. There's not a lot of momentum to earnings growth. It's real stock specific. So one thing that I've just picked up is the sell-off in enterprise software stocks globally. So Workforce, Salesforce, MongoDB, these stocks in the US off 25, 30%. We've got a handful of those sorts of stocks in the Aussie market, the Xeros and these sorts of stocks. So they've been a little bit softer as well. In fact, growth stocks more generally have been a bit softer. And the banks just defying gravity. I mean, how does the CBA just keep going up?
Yeah.
And one of the bears, Jonathan Mott at UBS, sort of capitulated a little bit this morning and upped his earnings estimates. But most analysts have got $85 and $90 as a target price for CommBank. It's at 122. You don't often see that. You don't often see the whole analyst community being completely one side of a big cap stock. It's 8% of the market, so it just really stands out for me at the moment.
Would you be lightening the banks?
I don't own CommBank, and that's a big position for an active manager to own zero weight in a stock that's 8% of the index, so I just can't get my head around the valuation. The company's earning less money than it was 10 years ago, and yet it's on 24 times earnings. It makes no sense. But having said that, I've been short for the last $30, and the thing keeps going up. So one day I'll be right. It's the guy in The Big Short. I'm not wrong, I'm just early. Well, it's the same thing.
Yeah, or like
it's
a broken clock,
thing.
You're right twice a day. Magellan though, the gift that keeps on giving.
Yeah, look, this is a pairs trade for long short managers. When you see a fund manager hit a bit of an air pocket, and they do, right? You don't stay in the sun forever in funds management. You could go back to Kern Nielsen at Platinum, and he hit an air pocket, and Hamish Douglas at Magellan took advantage of that and caught all that flow. And now it's Rajiv Jain at GQG who's managed to IPO his business on the ASX, in 2021 when Magellan was $40 a share and it's now $8, and he was $1.45. He's now $3 or $2.50. So the ratio from Magellan to GQG has gone from 18 to 1 to 3 to 1. So if you're short Magellan, long GQG, just on the premise that money's going to leave Magellan because of the performance issues and so forth, and find a new manager, which is GQG, then that's just been a fantastic one-way bet. Now, I thought that probably would have played out 6 months ago because there's been no new news on either business, and yet look at the ratio of those shares. So if you're long GQG, short Magellan, you've gone from pretty much 5 cents to 33 cents in terms of that trade. So that's been for those people that invest in long short managers, and we do, you're trying to find managers that can make money in any market condition by going long and short. That's been a fantastic trade. So it is the gift that keeps on giving.
Magellan though, do you think that there's value?
Well, it's a catching the falling knife sort of value, and I think obviously Magellan's made a number of changes. They've changed their CEO, they've changed their chair, they're trying to reinvent the business, they're trying to stem the losses, they've got some good people, some good strategies. I'm sure the numbers will start to turn around. But I just find the financial planning market or the financial advice market in Australia is a slow moving beast. It takes a long time to turn off from a manager and a long term to turn on to one, and when that flow starts, it's very slow to slow down. So I think the momentum is still very much with the GQGs of the world. So I wouldn't. It's a bit like AMP. There's probably some value at AMP or Lendlease, but these companies seem to be in a little bit. They have downside momentum in their business, and that's really, really hard to turn around because it's not just operational. It's morale. It's keeping your staff. It's keeping people energized when they can see the business shrinking. Yeah. How do you turn that around? It's really hard to do.
Well, one way you do it is sometimes with pay rises, the minimum wage going up, but you think in terms of the overall impact to the economy, we'll get GDP tomorrow, we're ruling out a rate hike.
Yeah, I think so. I think the fear was always that the Fair Work Commission went with 5.75% last year, which was seen as adding to inflation, and the government made it pretty clear that they didn't want minimum wage workers to suffer the higher the higher cost of living without getting a pay rise. So they wanted it to be real positive, and everyone's gone, well, okay, inflation's 3.6, that means 4, maybe 5, and it came in just above at 3.75. Now remember, there's only 79,000 people in Australia on a minimum wage. I would have thought it's a lot more than that. It's more about award wages. People are on about 2.6 million people on award wages. So it's more about them. But the fact that it wasn't 4 or 5 has caused us and others to reduce the inflation estimate. So if we'd baked in 4 or 5% for 2.5 million people, plus what was in the budget, which is deflationary at the headline level, we're looking at probably 3.1, 3.2% inflation for the full year now. And the RBA's got 3.8 in the latest estimate. So that's a big delta for inflation. So if inflation's only going to come in at 3.2, then it's not saying there's going to be lots of rate cuts, but it does rule out a rate hike.
Yeah.
So we think the market's shifted to that. So the market's pretty much pricing out. We had Warren Hogan, from Judo Bank come out originally and say 3 hikes, and everyone went, whoa, headline grabber. He then downgraded it to 2 after the budget. I haven't spoken to Wazza, but I reckon he's probably more like 1, if not 0.
Shout out to Warren, who I was literally just emailing
give
then.
Give us a buzz, Waz. What are you
well,
thinking
he's going to be on our show tomorrow, 11:40 after GDP. I literally was just saying, thanks for your notes. We'll chat to you tomorrow. So we will say, Martin Crabb says, shout out. What's your forecast
We're
now?
on it.
Yeah, well, I just checked that ANZ read. They're expecting that Q1 GDP growth forecast to come in flat quarter on quarter.
Yeah.
And they've readjusted down from 0.3%.
Just avoiding a recession, right?
Yeah, and it's interesting because they say, although economic activity may be weaker than the RBA expects, this may not necessarily be the case for labour market or inflation data.
Yeah, right.
So we're still very much on that watch for the GDP tomorrow. So I have to get your thoughts on Lovisa. You know it's a slow news day when we're talking about a share price appreciation of yesterday's news.
Yeah.
But, it has been such a market darling, and then you've got the drama of, the Smiggle demerger from Premier, and the guy was supposed to be running that. Like, what do you make of it?
There's a lot going on. So my understanding is that the guy put his hand out for more money. He wanted some $25 options or something, and the board went, not going to happen. And he said, well, okay, I'll take my bike and leave. And the speed at which they grabbed the guy from Smiggle suggests that maybe this has been an ongoing discussion. Yeah. But obviously now there's a war for talent. Look, there is a massive difference having a good retailer. Like if you look at someone like Nick Scali, for example, really, really good retailer in a really, really tough space. Like selling furniture in Australia, it's a very crowded space. You've got some really big players like Harvey Norman, big competition. But if you're a good retailer, you can make a huge difference. And we've seen that with Solomon Lew's stable. Like his businesses, whether it's Breville or some of the other premier investment retailers, he's had good management in there and they make a huge difference. So I'm not surprised there's a war of talent. Lovisa's a bit of a market darling. It's losing a favourite in CEO. It needed to step up and get someone else who's good. So I imagine there's been a bit of a cash splashed around in that space. And it might be a little bit like football teams trading with each other in the off-season. We might see a bit of a merry-go-round.
Yeah, and you say no to what one person wants and end up paying the other more anyway.
On Nick Scali, Wilson's put out a note, I think it was, and they reckon that Nick Scali will be able to make waves in the US. Do you think that's likely?
Yeah, well, they've just gone into the UK, so it sounds like...
I always wonder about an Aussie company.
Oh, look, it's usually a death knell, right? So if you're as old as me, Nadine, you remember South Corp going there, you remember Foster's going to the UK.
Even Bunnings.
There's a NAB with Virgin, and it's almost like sell the stock if they say they're going overseas. But it's becoming, there's lots of companies that have done it well. Look at James Hardie, look at Macquarie Group, look at Goodman, look at CSL. There's some great homegrown companies that have absolutely thrived in the global market. So it's less of an issue now, whereas 25 years ago it was like run away.
All right. Well, yeah, whenever I see that with something that's so sort of branded, locally branded.
Yeah.
Anyways, should we wrap?
I was going to say we'll let Martin Crabb run away. Thank you. As always, Martin Crabb from Shaw and Partners. We touched on it earlier that our stock of the day was Life 360.
Yeah, Koshi was joined by Rudy Philippek Van Dyke from FN Arena and Sean Hickman from Market Matters. Here's what they had to say.
My experience and my observations from the past few years also show that it's probably best to get on board with this type of companies when there's a little bit of a lull in the share price, when it pulls back and all of that. But that's
if you're in it, hold it.
I would definitely hold it,
but no new money,
and take the volatility on the chin,
right?
Because that's what happens with these high PE stocks.
But it is a very interesting model. What they've done so far, the execution has been fantastic.
Right.
Absolutely fantastic. They've got plenty of room to pull levers, make more money, as I said before. But I am very conscious that the better they do it, the more someone else can think, oh, well, we can just roll over them like they're not existent.
So you're the same as Ready. Hold if you're in there, but you wouldn't put new money in?
Definitely.
Or would you take profits if you're in there?
If I was in there, I'd probably take a third to half off the table.
Right.
All right, let's have a look at the after-close leaders and laggards on, as we said, a day with not too much going on. GrainCorp we touched on that updated forecast, having a very good day. Star Entertainment, you've got your hand up?
No, I was going to say, I looked. There is really no news associated with any of these companies.
All right, let's have a look at the losers then.
Losers, laggards.
Sorry,
we used to call them top and bottom movers, and then
dear.
I just had this
That
picture.
doesn't sound good.
Credit Corp, Imugene, Polynovo, Champion Iron, and Karoon. Again, not really any big stories associated with this. So for news addicts like Juliet and myself, it was a little bit of a quiet one out there, but we did speak with so many great expert guests, and I spoke with a whole heap of CEOs from the smaller end of the market. None of the companies that are on the screen right here or on the laggards list, but oh my goodness, I spoke with
you had a marathon.
Yeah.
Was it 6 or something?
I think it was, and it was a lot of fun actually.
Yeah.
So everything from step 1 to
Bamboo
Galileo
undies.
mining, to those bottom movers.
All right, let's move on. We're getting silly now, or at least I am. US JOLTS job openings tonight and factory orders for April. Of course, that JOLTS one is a kind of key indicator ahead of non-farm payrolls later in the week.
Yeah, and it gives you an idea of just how secure people are feeling in their jobs because it's got that quick rate in it as well. Tomorrow, of course, the big one will be GDP. So Warren Hogan will be joining us after that. He'll be talking about what does it tell us about the economy, how consumers are traveling, any revisions, what does it mean for the RBA, all of those kinds of reverberations coming from that quarterly report.
All right, but as we round out this Tuesday with just a slight dip coming through on the CBO 200 of around 0.2%, the ASX 200 today, my computer is not doing it very well, but let's see who's fastest at typing here.
Yeah,
it's like a bit of a competition. All right, here we go. Down 24 points, a third of 1%, 7,737 on the ASX 200. And as we mentioned, it really was a drag from energy, those mining players, as we saw iron ore fall, but the banks held up quite well today. E-minis
in the US are coming under a little bit of pressure as European markets get going in a more significant manner. And I just thought I'd flag that we've got Indian stocks coming under a lot of pressure as the Nifty Midcap 100 has extended its losses, last down about 5.75% as votes are counted in India's massive elections. So just a little bit of, it's a little unclear just what that victory margin for Modi will be, although it looks as if the Indian Prime Minister, his alliance, is leading in early counting trends. Yeah, all right, well that does it for today. As we mentioned, we've got Warren Hogan from Judo Bank after the GDP print tomorrow. A lot of other great guests. We'll bring it all to you from 9:40. We'll see you then.
The COB is brought to you by Pepperstone. Trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone. Trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.